to Tax Breaks. I'm your host, Kelly Phillips Erb. I'm a senior writer with Forbes, and you might have seen me on the web as Tax Girl. I'm also a tax attorney, and I work with tax professionals and taxpayers like you every day. There's a lot to talk about, so let's get started. This week, we're talking about IRS Criminal Investigation, including its role in taking down a fake cancer scam. Also, it's still a slow start to the tax filing season. There's movement on the budget, refusing to file, rescheduling cannabis, some notable updates, and a little tax trivia. What exactly are the rules for filing taxes during a coup? That's just one of several questions I've been asked about this tax season. Taxpayers aren't happy. Some are angry with perceived waste in government, while others believe that their financial data isn't secure now that Elon Musk and his Department of Government Efficiency, or DOGE, has so much access to federal computer systems. Still, others believe that if the IRS will be shut down, there's no point in filing. More on that in a moment. Whatever the reason, the tax filing system is off to a bumpy start. IRS data from the second week of the tax filing season, the week ending February 7, 2025, suggests a similar result to last week. Taxpayers aren't rushing to file. The IRS has received 23,589,000 individual income tax returns so far in 2025, compared to 25,553,000 received at the same point in 2024, a drop of about 8%. The IRS drop in processing is about the same, and visits to the IRS website have dropped a remarkable 40%. The good news? Refund numbers remain up. The IRS has issued 8,054,000 tax refunds so far in 2025, with an average refund of $2,065 per taxpayer. That's an increase of 18.6%. Not bad. While the IRS still wants us to believe this is business as usual, tax professionals know differently. Discussions about federal hiring freezes and reducing staff at the IRS are causing some anxiety in the profession. This week, TaxNotes sat down with Robert Kerr, who currently runs his own tax consulting firm and has a decades-long career in tax administration, to talk about changes to the federal workforce that are bound to have an immediate and long-term implications for the IRS. You can listen to the conversation on the TaxNotes podcast or read the transcripts on Forbes.com. Speaking of the tax agency, the IRS is likely holding its collective breath to find out what will happen to the agency's funding as Congress tackles the budget. So far, there's no consensus on the budget, but Trump has signaled what's on his wish list. That includes extending the Tax Cuts and Jobs Act, his 2017 tax cuts, sometimes called TCJA, through December 31st, 2034, eliminating income taxes on overtime pay, tips, and Social Security benefits, increasing the SALT, that's state and local tax deduction, and reducing corporate income taxes for companies that manufacture goods domestically. The House Budget Committee will consider the framework for the budget that's largely been designed by House Speaker Mike Johnson. The problem? Pulling that together in one big, beautiful bill won't likely happen without dropping some of Trump's tax-cutting goals. Extending the expiring provisions of the TCJA alone will cost in excess of $4 trillion over the next decade. Adding other tax cuts proposed by Trump in his 2024 campaign, including those tax-free tips, overtime, and Social Security benefits, could boost the price tag to between $5 trillion and $11 trillion, according to the Committee for a Responsible Federal Budget. There is one thing that the House did agree on this week: extending the deadline for beneficial ownership information, or BOI, reporting requirements. On February 10, the House unanimously passed H.R. 736, the Protect Small Business from Excessive Paperwork Act. The bill would postpone those BOI reporting deadlines for 1 year for most companies, those companies formed or registered before January 1st, 2024. Under the bill, the new reporting deadline would be January 1st, 2026. The bill moved quickly through the House with only 40 minutes of debate before the roll call. The vote was 408-0. 25 House members, that's 11 Republicans and 14 Democrats, did not vote. The bill now moves to the Senate, where it's not certain when or if it will go to the floor for a vote. And now, before we move on to our reader question, I have a quick personal update. I'm all packed and ready for my big trip next week. Earlier this year, I announced that I would be heading to Alaska to prepare tax returns as part of the Alaska Volunteer Income Tax Assistance, or VITA project. The project partners with the Alaska Business Development Center and trains volunteers to prepare tax returns for residents in remote villages who rely on VITA to prepare free income tax returns. I hope to pass some updates as I go, so think warm thoughts. Now, let's answer a taxpayer question. This week, a reader asked, what happens if I don't file my income tax return? Before I answer this question, it's worth noting that I've been asked variations on this question quite a bit this week. So first, let's address the elephant in the room. Nobody likes to pay taxes. But despite your feelings about taxes, there's no provision in the tax code that allows you to opt out of paying or filing, even if you disagree with the government. Now, here's my answer. Normally, penalties can be assessed for failure to file and failure to pay. The failure to file penalty is usually 5% of the tax due for each month or part of a month that your tax return is late. That's up to a maximum of 25%. However, if your tax return is filed more than 60 days after the due date, the minimum penalty is the lesser of a whopping $510 or 100% of the unpaid tax. The IRS also has the right to file a substitute tax return on your behalf if you don't file. Importantly, a substitute tax return might not give you credit for deductions and exemptions you may be entitled to receive. Plus, you'll still have to pay the tax due. And if the failure to file is willful, you could also be criminally prosecuted. Typically, the failure to file penalty is charged as a misdemeanor, resulting in fines of up to $25,000, though prison time of up to a year can be tacked on if the situation warrants. Exceptions apply, of course, if you're not required to file a tax return because you don't meet the filing criteria based on your filing status and income. But again, those are just exceptions. The bottom line, failing to file your tax return, even as an act of protest, can land you in hot water. If you have a tax question or matter that you think we should cover in the next episode, let us know. You'll find more information in the show notes. Of course, if you follow me on Forbes, you know that I love looking at statistics and enjoy a good chart or a map. This week, I'm focusing on cannabis, also known as marijuana. The year 2024 was a record-breaking year for legal cannabis sales, but recent activity from the federal government suggests that the year 2025 may look a little different. While still prohibited by federal law, possession of cannabis can lead to fines and jail time. Most states and the District of Columbia have legalized cannabis for medical or recreational use, or both. Just 9 states, those are Idaho, Indiana, Kansas, North Carolina, South Carolina, Tennessee, Texas, Wisconsin, and Wyoming, have not legalized any form of cannabis. Under federal law, however, it's still classed as a Schedule I drug. That's the same as heroin and LSD, which means that it's not legal in any form. It is against federal law to grow, sell, or use cannabis for any purpose, including medical reasons. A Biden administration proposal would have moved cannabis from its current classification as a Schedule I drug to a Schedule III drug, alongside ketamine and some anabolic steroids. Under the new administration, however, the DEA hearing is now on hold. While rescheduling would not make cannabis legal, it would allow cannabis businesses to claim tax deductions for business expenses. To keep that from happening, 2 Republican senators, Pete Ricketts from Nebraska and James Lankford from Oklahoma, recently introduced a bill that would prevent cannabis businesses from deducting business expenses on their federal tax returns. Specifically, the bill calls out cannabis by name, not by schedule, as ineligible for the deduction. In a statement posted on his website, Ricketts said, quote, "The federal government should not be subsidizing an industry that profits from addiction and undermines public safety. This bill ensures that marijuana businesses do not receive tax breaks while they continue to violate federal law." End quote. Now it's time for a little tax trivia. Which U.S. president signed into law the requirement that taxpayers with a financial interest in or signature authority over one or more foreign financial accounts with an aggregate value greater than $10,000 at any time during the year file a report of foreign bank and financial accounts, or FBAR. Your choices are A. President Richard Nixon, B. President Jimmy Carter, C. President Ronald Reagan, or D. President Bill Clinton. I'll give you a minute. The answer is A, President Richard Nixon. The requirement to file an FBAR was first enacted in 1970 as part of the Bank Secrecy Act, or BSA. The law, which was designed to identify transactions related to money laundering, tax evasion, and other criminal activities, was signed by President Richard Nixon on October 26, 1970. While the BSA has been around for decades, the IRS has, in recent years, intensified its focus on international tax compliance, including ensuring that U.S. taxpayers report their foreign financial interests. Now, it's time for a deeper dive, and it's a look at IRS criminal investigation. Earlier this year, President Trump suggested that he might fire IRS employees or send them to the border, telling a crowd at the Circa Resort and Casino in Las Vegas, quote, "They hired or tried to hire 88,000 workers to go after you, and we're in the process of developing a plan to either terminate all of them or maybe we'll move them to the border," end quote. What sounded like a joke to some turned out to be serious. A February 7 letter sent out by the Department of Homeland Security, or DHS, Secretary Kristi Noem, asked Treasury Secretary Scott Bessent to deputize IRS agents to help with efforts to crack down on immigration. Noem suggested that IRS workers could assist DHS with auditing employers charged with hiring illegal immigrants, as well as investigating human trafficking. Many of those skills appeared to be directed to employees of IRS's Criminal Investigation, or CI, division, though the letter also included tasks that fall within the purview of other IRS workers. CI is the sixth largest law enforcement agency in the U.S. It is the arm of the IRS responsible for investigating financial crimes such as tax fraud, narcotics trafficking, money laundering, public corruption, healthcare fraud, and identity theft. While other federal agencies also have investigative jurisdiction over money laundering and some Bank Secrecy Act violations, the IRS is the only federal agency that can investigate potential criminal violations of the tax code. If CI employees are reassigned to immigration and desk tasks, tax and other financial crimes may not be investigated. That's because CI is often called in to help with crimes that focus on money, like scams. One of those crimes is now in the spotlight after the true crime story was made into an ABC News documentary series. Scamanda, now playing on Hulu, is the story of Amanda Riley, a California woman who lied for years about having cancer. Arlette Lee, a special agent with CI, was brought in by local law enforcement to help with the investigation. Riley was a wife and a mother from California who, in 2012, started a blog called Lymphoma Can Suck It. She used the blog to write about her, quote, battle, end quote, with Hodgkin's lymphoma, a form of blood cancer. Only she never had cancer. She was faking it. It wasn't the dollar amounts that stood out to Lee, but rather the number of potential victims. Lee refers to this kind of matter as a righteous case, one where the importance to law enforcement is about the overall impact on the community. Riley eventually pleaded guilty to wire fraud and was sentenced to prison. She's currently in custody at a residential reentry management facility in Long Beach, California, a sort of halfway house to transition to life outside of prison. Her scheduled release date is December 4, 2025. Here's a snippet from my conversation with Agent Lee. You can find more linked in the show notes on Forbes.com.
When I started looking at, the time frame, it's probably like a 4-year period in which she was doing this. And it could have definitely started earlier, but we sort of look at we look at patterns over a certain period of time. And she continued it. She seemed to stop putting out information once Nancy was in the picture, and Amanda was aware that Nancy was kind of looking into her. So she stopped putting out information on her blogs or making it public. So it made it a little more challenging to see what she was doing. But the one thing that after I got involved, and I did attempt to interview some people, I called them,
Mhm.
and you have no idea how many people refused to call me back. They just did not want to call me back. And I lucked out because there was a couple folks, either I called, they answered the phone, or they did call me back because I think they were curious. But um, they all believed that she had cancer. And at that point, I realized, okay, no one's going to really want to talk to me if I'm coming in hard saying, you know, from the angle that I don't believe that she has cancer. So I realized, okay, I had to sort of be, I'm here, I'm just doing my job. I need to find out, what happened here. And when I took that approach, people were willing to talk to me, and they said, "Oh yeah, no, we believe she has cancer." And I donated to her. And then the question I asked was, if she didn't have cancer, would you have donated? And the answer is like, absolutely not. But she has cancer. And so go find the truth. And I said, I will. Because at that point, I knew she didn't have cancer, but I couldn't tell them that.
Now for something a little more brief, some quick tax and accounting newsmakers. The American Institute of CPAs, or AICPA, sent a letter to Congress asking to amend the Section 199A Qualified Business Income Deduction in preparation for a tax reconciliation bill. Specifically, the AICPA recommends that Congress broaden the deduction by increasing the phase-in amounts and adjusting them annually for inflation. Reuters is reporting that Italian prosecutors are investigating Amazon and 3 of its executives over alleged tax evasion worth 1.2 billion euros, or about $1.26 billion. The allegations are that Amazon sold goods in Italy from non-EU sellers, mostly Chinese, to help them avoid paying Italian value-added tax, or VAT. In state news, while the IRS began accepting tax returns on January 27, taxpayers in Colorado are still waiting for their tax season to open. A banner on the Colorado Department of Revenue website says, quote, "The 2024 return links for individual income tax, fiduciary income tax, and business income tax are coming soon. Please check in early February 2025. That banner is still up as of February 16. Also in state news, the state of Maryland sent out an estimated 6,000 Forms 1099-G to the wrong taxpayers earlier this month. Replacement forms have now been mailed out. The Comptroller of Maryland blamed a printing error for the mistake, but the Comptroller's office did not respond to Forbes for requests for comment. And that's a wrap. Thanks to all of you who continue to watch, comment, and share the show. Next week, we'll have more information, including some on scams, and take a peek into privacy issues. I'd love to know what you thought of this episode. You can send an email with your feedback to kerb@forbes.com. And if you liked it, please share. You can also find a link to the audio of each episode on Forbes.com. Thanks for listening, because paying taxes is painful, but hearing about them shouldn't have to be.